Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda, and we're joined by Bloomberg's Denitsa Sokova. Denitsa, what are you looking at?
Let's start with Microsoft. It's been the big story of the morning. Shares were sliding after the information reported that the software maker has lowered expectation for getting business customers to spend money on AI. Now, just recently, we have Microsoft's response. The company says it has not lowered sales quotas or targets for salespeople. Yet, the stock is still down about 1.7%. It fell as much as 3% in earlier trading. So definitely seeing some relief there. The ticker, of course, is MSFT. The report says that several divisions of Microsoft have lowered the quotas. There was one very interesting number. For example, for their product called Foundry, salespeople had increased customer spending about 50% in the last fiscal quarter, but fewer than 1/5 of the salespeople actually met those targets. So now that goal is about 25% growth. So they slashed it in half. Obviously, we don't have much information about how this is working on all the divisions, and Microsoft at the moment is saying it's not true. But it speaks to that question everyone has been asking, especially since October, about the price of all those deals that are happening all the time. And companies have been spending massively on chips, servers, other expenses. And investors are starting to punish some of that spending, or at least to look at it with a more cautious eye.
Yep, that's absolutely the case. What else we got?
We have CrowdStrike. Shares are down about 2%. It's interesting because the software company had a pretty strong third quarter results. Analysts were pretty excited about their annual recurring revenue number. That said, they're debating the outlook, so potentially we're seeing some of the downside from there. The ticker is CRWD. The company raised its fiscal 2026 guidance, signaling resilient demand for the company's expanding portfolio of artificial intelligence. Of course, this has been a big year for cybersecurity. Corporations have been facing so much threat. And another thing with the growth of AI is that those campaigns are getting more sophisticated, so companies are spending more and more. That said, Evercore said the results were solid and broadly consistent with last quarter narrative. But there is no meaningful upside surprise. So perhaps with the whole AI climate, that's why investors are not being too euphoric about the stock.
Yeah, but shares of that company up about 47% so far year to date. You've also got your eyes on Macy's. What's going on?
It's an interesting case. The company soared in earlier trading, and now it's actually down. The ticker is M. Shares declined after its profit forecast for the current quarter disappointed investors, overshadowing a solid lead up to the holiday seasons. Despite posting better than expected results, the company pointed to potential for soft demand. We're seeing this kind of a K-shaped recovery. Again, they're seeing not so much demand from low-income shoppers, but then the mid and upper income are stepping in. They've snapped up fashionable styles despite higher prices. That's what the company is saying. Macy's has been increasing prices on some items because of obviously higher tariffs has been one big thing. And the company is up about 34% this year before the earnings results. So it's been doing well, but today definitely some caution from investors.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.